And welcome. This is Mary Ellen McGonagle here with your Friday afternoon MEM Edge show. And this is the show where we bring you where the action is in the broader markets. Lots of moving pieces last week. We did end on a rather positive note. So let's dig right in as usual. I'm going to share with you what we are going to be looking at today. First up, we're going to go ahead and take a look at where did the markets close. You want to be aware of possible upside resistance, downside support, so that we can navigate the current bear market rally that's in place. From there, we're going to take a look at some of those top headline news that did move stocks this week, and then also other areas that were on the move and why. All of this, of course, is designed to help prepare you not only for next week, but beyond. Some of those news items that are pushing stocks are, in my work, anticipated to continue. That's the relevant news, of course, that I'm going to be sharing with you. So let's dig right in. First up on those headline news, we can see that retail sales numbers in the beginning of the week did come out. And there was a decline in December, rather unexpected. This did hit retail stocks. They were down quite a bit. Of course, we did have a shortened week, so this would be on Tuesday. But again, retail did decline, as did other areas in the beginning part of this week. We also did receive another inflation report, that PPI, and the news was good. Wholesale prices did post their largest drop since 2020, and it was all about gas and food prices. And the reason I'm pointing that out is because gas and food pricing is highly volatile. So that decline in that PPI number was not as positively responded to as you would think. And primarily because of those more volatile areas were driving it lower. We did see several Federal Reserve officials out there giving talks and speeches, and their comments were rather uniform. At least two of the four speakers did anticipate the Fed funds rate to elevate above 5%. And then also, generally speaking, their comments were that they anticipate rates to remain high through the remainder of this year. That was not great news. It was not received particularly well. We also did see weekly jobless claims, and that fell to a 4-month low. The point here is that the jobs market remains strong. This is one of the pain points for Fed Chair Powell, in the sense that high job strength is going to keep spending high and in turn keep those inflation numbers high. So that did come out on Thursday. Next week, we do have a very impactful inflation number. That's going to be that PCE, personal consumption expenditures. And this is the most closely watched inflation gauge for the Federal Reserve. We also are going to get January manufacturing and services PMI numbers earlier in the week. So no sitting back. We need to be at our desk paying attention to the markets and the subsequent response that may occur, because we also are in the throes of earnings season, and we will get into that. But from here, let's go ahead and take a look at the markets. We're looking here at a daily price chart of the S&P 500. And a couple of factors to point out here. We did end the week down a little less than 1% on that S&P. And here's that decline that took place Tuesday and Wednesday Wednesday and Thursday before we did see today's healthy rally. So the S&P at the end of the week did close back above this red 50-day simple moving average. This is a very widely followed metric as it relates to support and resistance. Ideally, we do want that index to be at least above that 50-day. More ideally, up above that 200-day is more constructive, of course, but for now, we certainly are above that. Another metric to look at with these markets are levels that are presumed to be resistance. And for the S&P 500, that is 3,900. And we did close above that at 3,951. So net, a good week. We can also see the metrics for momentum. RSI dipped below 50. However, we did close above that at 54. So that indicates positive RSI, which is relative strength momentum. And then faster moving momentum. These are the stochastics that I use for these broader market indexes. And above that 50, stochastics are in positive territory as well. So we certainly did regain our footing Friday today with the rally, but note the volatility that is inherent in the markets. So looking good, but no need to dive in at this point just because of that volatility, really depending on your appetite. So from here, I'm going to share with you a view of the tech-heavy Nasdaq. It fared better than the S&P, up 0.6%. And take a look. It did dip below the 50-day simple moving average on Thursday, was able to really turn that around. It was the top performer today, up 2.7%. We can see we're back up above that red 50-day simple moving average. And these momentum indicators, particularly the RSI, never turned negative for the Nasdaq. You can see that we're up above 50, stochastics up there as well. Net, we are seeing higher price movement in these growthier areas, certainly over the last 2 weeks. As we move forward, we can segue into precisely where within the NASDAQ, but certainly good to see that at the very least we are above that 50-day with positive momentum. So from here, I do want to share with you some of these sector ETFs, the 11 sectors in the S&P 500. So we are looking at a 2-month daily price chart view. And what I've done with this view is added this relative strength indicator, that's RSI. It is sorted in descending order. So in essence, up here in this left quartile are your relative outperformers. It's not going to be very whippy. It's not totally taking just last week's price movement into account. It is a longer term. But then also down here in this lower quartile are your weaker areas. So 2 things of note here. You want to be aware of where that relative outperformance is, of course, so you can participate. And then likewise with those weaker areas, make sure you're not overweighted, because these areas that are up here in the forefront have been progressing up to that forefront. That's another way this view can help you. You are going to be on the lookout for sector rotation, and it is happening this year for sure. So let's go ahead and dig in just a little bit here, because energy had been moving up, but here it is up in the front again, where it had resided for a good part of last year before deteriorating. We can take a quick look at that XLE energy grouping, and we are back above key resistance with this 50-day. And the RSI and MACD are in positive territory. This is an area that I have within my MEM Edge suggested holdings list. I am overweight energy, lots of good things happening in that area. So use that button, trial button below if you want to have access to that, as well as the reasons and what we are on the lookout for within that, as well as other sectors. Also up here is basic materials. I did begin speaking about this several weeks ago, this move, this turnaround that took shape, certainly really took shape last week. We did get a pullback, and then we are ending the week. This is basic materials, XLB, on a very positive note. Again, RSI up above 50. Here we're using the MACD up here above 50, so still looking quite constructive. This is an area, again, that I've been speaking about, and we do have holdings there as well. So from here, technology, I did want to point out to you, because if you follow the show weekly, welcome back. I also wanted to remind you that tech had been residing down in this weak quartile for quite some time, but we are seeing it move upward, at least into the upper half among those 11 sectors. And you can see why. This is a nice reversal, downtrend reversal taking shape here. We do have positive momentum. So looking very good in tech. Of course, some of those heavier weighting FANG stocks are helping, but other areas are as well. So down here in this lower quartile, kind of surprising. This is XLI, the industrial ETF, and it really got hit. I did talk about that in my midweek report as to why and where, but just a very sharp reversal now down below this 50-day simple moving average, super big volume. So it will be interesting to see if industrials can get back in the game. Let's go ahead back and take a look at some of these other areas: healthcare, utilities, and staples. And these are all defensive areas of the market that fare well, certainly during periods of higher uncertainty. And they are value stocks. So as interest rates increase, you will see a move into these areas as well. So these defensive areas have been down here on this lower right-hand quartile for at least 3 weeks now. So we can see that they remain out of favor. Consumer staples really getting hit, down 3%, likewise with utilities. So let's move on. I do want to get even more refined. We can even drill down further beyond those sectors to take a look at some of these ETFs. And these are areas of the market that are certainly highly represented as far as having a number of names within their underlying groups, but also impactful as it relates to sector, group movement, areas I find to be super powerful to stay on top of. So up here in the forefront, this was true last week as well, but gold stocks continue to trade higher. Lots of very sound reasons for that to be taking shape. And I shared with you that materials sector as well. So we can see it's remaining up here in the forefront. But let's take a look at a brand new entrance here. Up here in this left upper quartile are your relatively stronger areas. And this is an area that had been slowly progressing, but here we are up here, and that is IGB. And this is the software ETF, very widely followed. And software stocks really definitely got hit the worst as interest rates were on the rise, any kind of fears relating to a recession. This is the area. I'm just going to pull up a weekly chart to really magnify how down and out these names got after having a terrific post-pandemic lockdown rally. So we can see that it is beginning to potentially turn. We do still have some resistance here, this 200-day simple moving average, but your momentum now in positive territory. And this is an area where I am expanding my watch list because there are certainly several very names that are really setting up quite nicely. Another area up here in the forefront that had been progressing, nice to see another tech area. This is semiconductor stocks. And you can see last week we had this nice downtrend reversal back up here above that 200-day momentum up here, positive territory. Now, I will say the move into semiconductor stocks is super refined as to where there are certain areas where semiconductor chips remain in high demand and other areas that are languishing and are expected to languish. New technology that is being introduced is pushing with as it relates to AI, and other areas are pushing particular chip names higher. So I'm going to get into all of that this weekend with my report, but note that semiconductors have turned positive. So very, very, I, of course, like that when these names get going. Certainly within technology, that is where some healthy gains can be made. Let's take a look at DBC. This is the commodity index I talked about. Well, I will show you oil, but we did talk about gold and some of those other commodity areas that are on the move. Also of note, the Nasdaq Composite up here in this upper quartile. I talked about the outperformance that we are seeing in this technology and growth heavy index. And then up here are small caps, and they did give back quite a bit, but they were the top performer the prior week. And we can see it is remaining in a positive constructive area above key resistance with positive momentum. So small caps on the move, which is good. When you see small cap stocks rallying, it generally indicates a confidence in the market. So we like to see that. Now, I did mention to you that retailers were down, certainly after that retail sales numbers, but a nice bounce today in the stock. I mean, in this ETF, the retail ETF. So this is another area, again, that's very selective as to which areas within retail, but there is vibrancy. Let's take a quick look here at the Brent crude pricing. Not a tremendous uptick, but generally still heading in the right direction, these higher oil prices. A lot of that with China's reopening and other pressures on supply demand within the oil space. So down here, again, these weaker areas, but this is the yield on that 10-year. We want this to be weak. If you go back and take a look at this period as interest rates were rising, August into November, very difficult period for growth stocks, as rising rates are not constructive. It reduces the value of their earnings going forward. So nice to see interest rates, that yield on that 10-year declining. And then the Dow Jones Industrial Average had been a real winner here. Let's take a look at this move October into mid-December. And then even beyond that, the Dow Jones Industrial Average really was the top of the major indexes. But this week down almost 3%. And a lot of that having to do with that decline in those industrial stocks, worst performer for the week, and then other areas that are also impacting the Dow Jones Industrial Average, which again was a very weak performer this week. So that's a view of the broader markets. Now, from here, what I would like to do is share with you some of those drivers as it relates to, we've reviewed areas that are showing relative strength, those that are not. So from here, let's go ahead. I'm actually going to go back to this initial interface page here on StockCharts.com. This is an exercise that I highly recommend. It takes a matter of minutes, but it can be very telling, particularly if you do it regularly, because you will be able to see themes beginning to emerge. And that is the market movers among the S&P 500, those stocks that are up the most on any given day. Now, here's what we're on the lookout for. Number one is, of course, those bigger movers. I then from here oftentimes will go ahead and uncover why. But we're looking for areas of the market where several stocks are being represented. So let's not waste a moment. I'm going to go ahead into that candle glance 2-month daily price chart view and share with you what today's view is really telling us about the markets, because it's not just today that this type of price action has occurred among select stocks. It has been taking shape over the last 2 weeks. So first up here, looking at these. Now, I've been watching and following the markets very, very closely for 25 years or so. So I'm going to have a familiarity with these ticker symbols. So I will go ahead and get through, share that with you. SIVB is a very well-known bank stock. We can take a quick look here. You can see it's up 17%, gap up, super big volume. And this is a banking, it started out as Silicon Valley Bank years ago. They are banking to the innovative Silicon Valley area, but they've also expanded into many other areas. It's now SVB Financial Group. Let's go ahead and progress a little bit further. SYF is Symphony Financial. SBNY is Signature Bank of New York, a big stock. This stock has been a winner for us in the past back here. So it is beginning to turn. So from here, I think you may be able to catch on to the theme as it relates to financials. Now, there is a secondary theme within that. And I talked about earnings season, that we are in certainly the very beginning stages, but it is picking up quite a bit. Bank stocks are the first to report their earnings, and SIVB did come out with good numbers. They also had a high analyst Wall Street upgrade to the bank, so that gap up. SBNY reported their earnings last week, and we're seeing that continuation rally up 7% today. Oftentimes, these companies will come out with earnings, and it'll be a little bit of a catch-up for Wall Street, and the analysts then say, I like this stock, I'm going to upgrade it. So another dynamic that is taking shape and drove price action this week took place here. I not sure if I pointed it out, but it is a financial COF. But more importantly, relative to this 6% move today is the fact that the company announced job cuts, and that has been a big driver among stocks as they reduce their capital expenditures by reducing their employee base. So that is the second theme. I talked about earnings, and let's take a look at earnings, other names. Netflix, of course, came out, not so much on the earnings side, but subscribership increase. That's what you want to look at with this particular stock, up 8.5% on the news. So it is earnings and job cuts are two of the primary movers. And we can take a look at another company that reported earnings today. This is PPG, a chemical company, and take a look, up 6%, and a nice rally shaping up in this downtrend reversal here with PPG. So let's go ahead. I want to make sure I'm not missing any names there. Nope, we are fine. So we are going to just take a very quick look here at the Dow Jones and some of these big movers, and it's going to be a lot of the same. Disney announced cuts as it relates to employees, and we can see the move there. Also, that Netflix subscribership boost, oftentimes you'll see that trickle down where it will also impact other areas that have digital entertainment similar to Netflix, and Disney would certainly fall there. Microsoft is a company that also announced that they are cutting jobs, and you can see that nice 3.6% gain that took place there. And here is, I talked about the Dow Jones, and this is what we're looking at, the biggest movers to the upside. But let's take a look at one of the bellwether industrial names that really fell out of bed this week. That's 3M on a downgrade. You can see it just rallied up to that 200-day and then found resistance. This was one of the reasons that the Dow was down so much. There were other industrials as well. So I did certainly, as long as it was there, want to share that with you. And then I believe that's it relative to one last name here, because it did report actually just maybe 3 weeks ago. And this is Nike, NKE. You can see this gap up really surprised investors with their earnings report above estimates. They also guided higher going forward. And you can see the subsequent rally that took place in Nike. So that is a theme that will continue to, I believe, keep the markets afloat if we see positive results and positive guidance higher, as we have seen certainly in a couple of very highly regarded semiconductor stocks. And then also earnings, not all of the news was good, but more to the point as it relates to those names that were most highly impacted this week, or down or up the most. And we can take a quick look here at Charles Schwab, SCHW. They came out with weak numbers, and then they were double downgraded by Bank of America. So a double whammy here. You can see this decline that took place, but most importantly is just how impactful these earnings reports can be, because investors are on the lookout for news, not only positive, but also negative. Here is a company that had good numbers. It is Ally Financial, ALLY, and take a look, up 20% today. Huge volume. I anticipate further upside, particularly if we can get up above that 200-day simple moving average. But again, all about those earnings that are driving price action. From here, I'm going to take us over to take a look at a different view of the markets. And what I wanted to share with you is it's called FinViz, and it is can be really helpful, particularly if many of us that look at charts regularly tend to have that visual. I like the visual view, because very succinctly and quickly you can get quite a bit of information. So what we are looking at here is a view of the S&P 500. Quite simply, I asked to see the 1 week performance of names in the S&P 500. So the larger blocks are going to account for and have a larger representation or percent of the S&P 500. And then as it relates to the coloration, the brighter the green, the higher the stock has proceeded for that given week. So despite the fact that we did end the S&P 500 down about 0.8%, Nasdaq down 0.6%. So not tremendous losses, but we do see an awful lot of red. So I talked about industrials. This is just a super quick way. Again, this is for the week, not just today. And you can see where that deterioration was among those industrial names. A lot of these defense areas, Deere got hit, DE, a bellwether name in that area. And then also we can see for instance, healthcare was languishing. We talked about that being in the lower quartile. And here we are certainly among the bigger names in that area. And a lot of these big pharmas are struggling at this point in time. And then in that retail space. So I think you can see what I am talking about as it relates to, I talked about semiconductors. It's not every name that's moving. It's very selective. So this type of view can, I find it to be super helpful, particularly when you have a sense that the markets ended on a very positive note. But of note as well is the fact that it is not representative or being represented absolutely everywhere. So I am going to leave it there, everyone. I hope you have a fantastic weekend. And again, those of you that haven't, go ahead and use that trial button below to access a 4-week trial of my twice weekly report. Very nominal fee, but it's really going to help you stay on top, not only on these markets, but of also this sector rotation that's taking shape. And I do look forward to seeing you here next Friday.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.